Guys, and welcome to another edition of Market Marauders, beating the market one trade at a time. Alright, so as the title said, yes, I did make that amount in 2 days. Uh, First things first, hit that subscribe button down below. Hit it, hit it. Like, comment, and share, and we're going to dive into it. So the first one came from, as you guys have seen in the news, been going crazy. Tesla. That's right, Tesla. So probably around uh, January 2nd, beginning of the new year, bought two calls for 144, and then the week Tesla went crazy before it dropped back off uh, at its record highs. I sold it, sold my two contracts for 1320. So big profits there. Uh, and then the next day had a call for Lunkin Coffee. So that was on the 8th. This one was on the 9th. So the 9th, I had $70 call for Lunkin Coffee. And then I had sold it that same day for $130. So my profits, if we calculate that. So I sold Tesla for 1320, and I sold it for 144. So that's the profits from the Tesla one. And then I had sold the Lunkin for 130 and I bought it for 70. So if we add both those profits together, boom, that's how much I made 2 days. And you guys can do it too. Um, there's nothing to it but to do it. Uh, but let me explain how I did it. Um, Doing options. So, I'm kind of new to the whole options thing. I've been trading for a little bit, learned about options a little while ago. Um, but, you know, been dabbling, started off small, but making pretty big moves. These are my current options that I have. Got one for Facebook on the 17th, uh, Lenore for the 17th, ExxonMobil for the 17th, and McDonald's for the 24th. So uh, basically, the Exxon one was because the conflict. You guys are U.S. citizens. The conflict going on in the Middle East. I figured that would raise oil prices, but they haven't raised as much as I thought they would, or as drastically as I thought they would. And Facebook, because Facebook has just gone crazy recently. Their price wise, I think they're going to continue to go up as we get closer to election, and they figure out the amount of people using Facebook has just continued to increase, and it's not just in the U.S. It's like all over the whole world. The amount of people who use Facebook has just increased to like astronomical numbers. Before it was like just kids. It was the hip people who had Facebook. Now it's like everybody has Facebook. Um, and then Nor basically for Alien, they increased their dividend um, threefold. So they basically tripled their dividend recently. So the people who are going to be buying that are going to be long-term holders. So basically for dividend investing is a lot different than doing investing for day trading or doing investing for options. Dividend investing, you want to have your share by the record date in order to participate and get the dividend. So people who buy this are going to buy it and hold it for a long time, but they want to make sure they get it before the record date. So the price of that is going to continue to go up as it gets closer to that record date. So basically, that was my theory behind, buying that because, once they raise the dividend, people are going to want to get that dividend, but they have to hold it to that record date. So the price is going to shoot up when it gets to that record date, so that people can get that dividend. So, that's always uh, a good way to look at it. It's kind of an outside of the box way of looking at the price rise. Um, and then McDonald's, they had some weird news that came up that was like they were being sued by some executives in the company for like racial discrimination. I had read that article a couple days ago, but I think anytime there's internal conflict within the company, um, that I think that always affects the company's price, and it always kind of looks bad on the company, even though like whatever they were doing positive. I know they had some positive news with like Beyond Meat. They were extending their partnership. I think they're doing a trial demo run of some Beyond Meat burgers, and Beyond shot up like through the roof. McDonald's shot up too, but I think the other news is kind of a big deal too, and I think that'll kind of overshadow the Beyond Meat thing, in my opinion. Uh, as that starts to circulate a little bit, because it's not like their first incident of crazy stuff going on within the company. And anytime something goes on within any company, that's kind of takes the main focus, especially if it's something negative and not positive. Um, but anyway, those are my uh, picks for the options that I have going on now, and my reasons behind them. Um, and for some of you out there who like don't know what options are, I can explain them a little bit. Explain, uh, give a brief rundown of how they work. So let's go to Tesla for an example, and let's look at an option. Okay, so basically, if you have Robinhood, um, if you don't have Robinhood, I have a link down below where you can download Robinhood. I get a share, you get a share. So it's always a good thing. And when you get that, uh, when you get Robinhood, you have to go to your account and actually apply for uh, options. So even if you have Robinhood now, and you're like, how do I trade options? I didn't know Robinhood had options. You have to go into your account settings and actually apply for options, and then they'll approve you or not approve you. But most of the people I know do it; they get approved. So they'll approve you for options, or they'll review your account to be approved for options, and then you'll have the option to do options on your account. It works pretty fast. In my case, it did. It was kind of like same day sort of thing, turnaround, so it wasn't a long process. Um, and then uh, when you get it, then this will be the menu where you can look at the options. Um, so you can buy and sell calls and puts. So to buy a call basically means that you're betting that the stock is going to go up above this right here, which is the strike price. If you buy a put, it basically, let me go to a put. If you buy a put, that means you basically believe that it's going to go below a certain strike price. So uh, each call and each put has an expiration date, which you can find here. They go out to, all the way to September. So basically, that's the date that the contract ends, because options are contracts. And these contracts are contracts to buy 100 shares of a stock. Um, so on here you have the price. This is not the price that you're paying. You'll take this price and you'll multiply it times 100 basically, and that'll be the price that you pay for your contract. And this is a per contract thing. So if you want to buy multiple contracts at this stock price, you basically take this number, multiply it times 100, and then multiply that number times how many ever contracts you want to get, and that'll be how much you're going to pay for those subset amount of contracts. Um, so that's basically how that works. Um, we dive into here. They have implied volatility, which is basically my interpretation of that is the percent you think that the percent that they think that the stock is going to get to this value, this 477.50. So the higher the implied volatility, uh, the more likely that that's going to happen. Um, let's go and compare. 48.54 is 48.65. So I think that may be correct. Let's go down and look at some more of those. 48.62. Okay, so I got too many of them open. So yeah, so the implied volatility just keeps going up as you go down. Or it didn't go up on that one. So it's 48% implied volatility. So it may be the other way around. Guys, I'm no expert on options. So that's what I believe it is. And then also there's a theta, which is a very important value, but I have not been able to interpret that. So yeah, basically for me, the way I choose options is I read a lot of articles on how the stock is performing, what's going on in the company, and then I look at old stock values and things going on around the company and how that company has performed in the past with similar news. I know that may be an old person way of doing it. Just sitting and reading a whole lot of articles and doing historical analysis on how the stock performed and using that to make my stock picks. But that's how I found the Tesla one. That and also talking to some friends about it, as well as you know going and watching the news, watching videos about it. I kind of immersed myself in the company, and then it worked out for the best. Um, if you guys want to start trading options, or if you want to start trading stocks in general, I would say always do your due diligence. Uh, always. So the number one thing is do your own due diligence. Let me put it specifically: do your own due diligence. Don't just rely on people or news articles. Or one news article to be your sole basis for why you're picking the stock. Also, don't make it, emotions is the reason you're picking the stock. Or be like, oh, well, all my friends own this stock, so I'll get this stock too because it's got to go up because my friends own it. Or don't be like, well, this one news article said this stock's gonna go bankrupt, uh, so I'm just gonna sell it. That's not always a good thing to do. Always try to get as many sources of information as possible on the stock or any company before you invest in it or before you sell it. Try to get as much data as you can to make a solid, sound judgment on what's going to happen, because that's the best way to pick it when you already know what's going to happen. Now, sometimes that's easier said than done, and it's a lot harder than most. Um, but the more due diligence you do, the easier it is to make those decisions. Um, Secondly, what I want to talk about is um, you don't need a lot of money to start trading stocks or trading options. I know people always talk about penny stocks. Um, they're like, oh, you buy 1,000 shares for 10 cents a share, uh, but you can be rich. But I don't think that's the way that you want to that you want to go. You want to start off with small trades of companies that you know about, not some just random, you know, tech medical company that somebody said on some forum is going to go up because they found some, new treatment for cats or whatever. They found some new cat ointment and the stock's going to shoot through the roof because everyone needs this cat ointment. You definitely don't want to go and trade stocks like that. Uh, especially stocks you don't understand. Unless you are an expert on cats, then be my guest. Definitely buy that stock. But you want to get stocks of stuff that you know, uh, and stuff that you've read about. I mean, even if you look at these options, I mean, McDonald's, ExxonMobil, Lenore, people may not know, but Facebook, these are all common household names. I mean, everyone uses Facebook, gets gas, and eats out. So, I mean, you know, just buy stuff that you know, and if you don't know, then just do a lot of research on it before you invest in it, because those are always, the trickiest ones, trying to figure out what some company does, and you don't know what the company does, so you just see it going up and you just jump into it. Those are always really weird, uh, and nerve-wracking stocks to hold. So, always do your due diligence when it comes to that. And, make sure that, you start off small. Starting off small may be difficult. You may be in a financial place to, you know, start off big, but I guarantee you starting off small will help out a lot. Excuse me. Starting off small will be the best thing that you can do, because you can learn a lot more when you start off small. Um, I try to keep my account semi-small, just for the fact that, the more money I have in my account, excuse me, guys. If you see on here, my account grew crazily. It was like plus, you know, 1,100 in the past week. But I took a lot of that money out, and that's when my account went down. Because I try to keep my accounts manageable, semi-small. Took that money, just put it away in savings, and trading with what I have now, because I think it's more valuable to learn, uh, and I think you learn more when you have a smaller amount in your account to manage, opposed to having a whole bunch in your account to manage. It helps you make smarter decisions and less reckless decisions. Because trust me, if you have a whole bunch of money in your account, you're going to want to make a lot of moves. And most likely, most of those moves are not going to be good moves. Most of them are going to be kind of reckless. You'll have some that'll be pretty good moves, but you'll most likely break even because the amount of reckless moves is like the same as the number of non reckless moves. So, you know, if you have less money to work with, then you can sit back and focus on making good solid trades and having good justifications on why you made those trades. Um, and they may not all work out, but having more money is not going to help them work out. Uh, but the whole goal is to just learn, and to learn how they worked and how they didn't work. You know, Trading, being in the stock market, trading in general, uh, with stocks, bonds, uh, options. It's all a learning process, um, and it's about continual learning. You're never going to stop learning when it comes to trading stocks. There's always different patterns and different methods and different ways people invest. Um, you know, but it's, always learning along the way. Some things work and some things don't work. Some things that used to work don't work anymore. And some things that you never tried are the best thing that you could have ever thought of. But, it's always a constant learning process when it comes to it. So, you know, everyone wants to grow their account. I know that's good, but learning about how it works and how you work, like how you think, is always the better choice when it comes to it. Learning how you think about a stock, or what you thought about a stock. Was it right in that situation, given all the data you saw, or how this trade went right? Considering all the things that you looked into in the stock market when you did your due diligence. So you know, always look back on your trades, either good or bad, and see what you can learn from them to make yourself a better trader. It's always the key. Um, and, you know, I'll try to make some more videos like this, giving you more updates, on my account, and more updates on just trading in general. Because I know some people out there are like, I don't know if I'm ready to jump into that yet, which, is understandable. Um, but, learning is always the best thing. Doing your own due diligence, uh, doing a lot of due diligence before investing, and investing in things that you know. Uh, that's always a good thing. Um, and things that you feel confident about, even if it was a bad trade, be confident that, okay, yeah, I really thought this was the way this was going to go. So, you know, always trust your gut, um, and make sure that you do your due diligence. Those are my two main takeaways from this. So I'll continue to give you guys updates on what's going on. Make sure you hit that subscribe button down below. Like, comment, share. Tell me what you guys are, what stocks you guys got your eyes on, um, and what options you guys are trading out there. And I'll see you guys next time. Peace.